Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the euro-dollar pair with Paulo Greco. The average volatility of the EURUSD currency pair of the last 5 trading days is 93 pips. Characterized as moderate. Today, April 9, we expect the pair to trade between the 1.1606 and 1772 on Thursday. The upper channel of the linear regression has turned downward, indicating a potential trend change. The CCI technical indicator has entered overbought territory, signaling a potential downward correction in the near future. The EURUSD pair continues to maintain a downward trend driven by geopolitics. The global fundamental backdrop for the dollar remains extremely negative. However, the market has focused solely on geopolitics for more than a month, rendering all other factors largely irrelevant. When the price is below the moving average line, it's a sideline on a graphic. Small short positions can be considered, with targets at 1.1475 and 1353. If the price is above the moving average line, long positions can be capped with targets at 1.1719 and 1772. For a stronger upward movement, the geopolitical backdrop needs to start improving. Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents. You could plan to buy the pound today upon reaching the entry point around 1.3406, with a target for growth to 34.48. At 34.48, you could plan to exit the market and also sell the pound in the opposite direction, anticipating a movement of 30-35 pips from the entry point. Strong growth in the pound can only be expected with very strong data. Before buying, make sure that the MACD indicator is above the zero mark and just beginning to rise from it. You could also plan to buy the pound today if the price tests 1.3382 twice in a row, while the MACD indicator is in an oversold area. This will limit the pair's downside potential and lead to an upward market reversal. A rise to the resistance levels of 1.3406 and 34.48 can be expected. You could plan to sell the pound today after breaking the level of 1.3382, which will lead to a rapid decline in the pair. The key target for sellers will be 1.3345. where you could plan to exit short positions and immediately buy in the opposite direction, anticipating a 20-25 pip move back from the level. Pressure on the pound may return at any moment. Before selling, make sure that the MACD indicator is below the zero mark and just beginning to decline from it. You could also plan to sell the pound today if the price tests 1.3406 twice in a row, when the MACD indicator is in an overbought area. This will limit the pair's upside potential and lead to a downward market reversal. A decline to the support levels of 1.3382 and 33.45 can be expected. That's all for today. See you online soon.